Hi, this is Dr. Gregory and Accounting 667 Advanced Audit, and we're going to continue talking about specific asset misappropriations by looking at the cash disbursement schemes here in Chapter 5. So in Chapter 4, we looked at the asset side, and now we're going to look at the cash disbursement schemes on the payment side. The report to the nations identified misappropriating schemes that present the greatest risk. And we can see a mixture of both cash receipt and cash disbursement schemes. So we've already talked about the cash receipt schemes. So let's take a look at the cash disbursement schemes. We have billing schemes, expense reimbursements, check and payment tampering, which you would think in the age of electronic checks that we don't have that, but in fact, they are 10% of all of our cases. We have payroll schemes that are still going on, and we have register disbursement schemes that are going on. So let's take a look at a number of these. As we can see from this graph, we go from the least risk to the most risk, and billing and non-cash schemes seem to be the most riskiest. And again, we saw this in our Chapter 4 lecture. We have billing that can take as long as 18 months before that scheme is detected. Why? It could be that there's a lack of segregation of duties in the billing department. It could also be the fact that we are not doing routine work checking to see if we have vendors that don't exist. So we have fake vendors out there that payments are being made to. We also have a longevity of life in check and payment tampering schemes. Again, a lot of this is due to very poor internal controls where we're not doing our due diligence in the accounting office of double checking for these types of things going on. Here's some schemes we're going to look at. We're going to look at billing schemes, including overbilling and kickbacks, fictitious vendors. We're going to look at some check tampering schemes. We're going to look at fraudulent ghost employees and payroll, fraudulent expenses, and cash register disbursements. Billing schemes. The easiest one is fake vendors. We create a vendor. So someone in the accounting system creates a new vendor. Sometimes it's based on contracts. So legal or marketing develops contracts with our customers. They send a copy of the contract off to the accounting department so they could set that vendor up to get future payments. Well, if you've got someone that can set up vendors without anyone knowing, then we have an internal control issue. So what you probably want to do is have a report that prints out that compares new vendors established every week and compare those to either purchase orders or contracts that have been established for those new vendors. And if you find that there isn't a lack of documentation, that might be a red flag. You want to look into that. Shell companies. Organized crime use shell companies all the time, or they create straw owners or straw buyers. So you have to make sure that those companies are legitimate. We have billing schemes where we call pay and return. The employee sends a payment to a legitimate vendor in our list who doesn't owe us any money, and then the check gets returned. Why did you send us this check? Oh my gosh, I'm so sorry. My mistake, my bad. Then they pocket that check. So you want to make sure that when you have a payment going to a vendor that you have a legitimate invoice and not a copy of an old invoice and make sure the dates match to where we should be paying them. Sometimes personal purchases can be submitted as company purchases. This is often found on company credit cards. So when you are paying the company credit card, look at the details. If you've got a company credit card for somebody and there's charges of Nordstrom's clothes or expensive restaurants when that person had no legitimate reason to be going to that restaurant on company funds, you want to look into that. And finally, sometimes billing schemes are just lack of oversight. Management really needs to be proactive and ensure that you have support for billings that you're going to be making payments to. Check tampering schemes. So checks are printed. So we have a billing system where somebody reviews the edits, should be reviewing a list of the payments, approving them, and then we push the button and the checks get printed. Now, at some point in time after the check is printed, but before the check is mailed, that check is altered. So we have a signature, the boss has signed the check, and there could be a number of different reasons the altering could take place. One, old-fashioned erasable ink, it's still out there. I remember when I was going to school, you buy a pen with an eraser on it. Oh, I can write it in ink and then erase it. It still happens. Small companies still handwrite checks at times. You can change the amounts or change the vendor name after it's been printed. Forged signatures of your boss. It's, banks don't check for forgeries. They just accept checks that come in. So the only people that are going to know it's forged is the person who forged it. Or if that check goes back to somebody who is doing the bank reconciliation, who is different, segregation of duties, than the person who created the check, you might be able to identify a questionable signature on a check. Or blank checks. How many times has your boss gone on vacation and given you a stack of signed checks, blank signed checks, and says, something comes up, just use one of these? How easy would it be for someone to use those checks for their own benefit? Very easy. Sign check. Make it out to whoever you want for as much money as you want. And don't be fooled by if over $10,000, it must contain 2 signatures. Again, banks aren't going to look at that. You're going to have a stack of checks in a deposit bag. They're not going to go through and go, oh, look, that check required 2 signatures. It's not their responsibility to look for that. So don't just assume that, oh, they can only steal up to $10,000 because it takes 2 signatures after $10,000. You bet they can steal that still. And finally, forged endorsements. You get a check. The cash receipts department gets checks from customers. One of the first things you do is you turn that check over and you endorse it with the company bank deposit number. Well, it's been known that people will have their own personal stamps with their own personal checking account number, and they stamp those. So there could be forged endorsements. Fraudulent payroll. The biggest one is ghost employees. I worked on a case where we had a person that came in as a consultant for a company who we were going to install a new payroll system in, and this person was an expert in that payroll system. And so that person was hired, and that person was to develop the payroll system, get it going and get it running. And while they did, because they understood that system so well, they were able to develop ghost employees and create a myriad of checks because no one else understood that payroll system but that one person. So the CEO was just signing off on the payments for payroll without looking at the details because they didn't understand the reports. And the payroll person was saying, don't worry, I've double checked everything. I just need your signature on this so the bank will accept all these payroll checks. Fine. Trust. Trust is not an internal control. So be sure that you as manager are always looking at the detail. And then once that ghost employee was paid, that payroll person would go back and so-called delete that employee from the system. But there's always a history. Every computer system has a history. The reason why that person got caught was because they brought me in to backfill and be a support person for that payroll employee. And so when that payroll employee took vacation, I did the payroll and I found people that didn't exist. Ghost employees. They're created, they're paid, and then they're deleted. Another fraudulent payroll is adding hours to hourly employees or reporting higher wages, giving someone a false bonus. And it could be someone within the payroll department paying themselves, or someone in the payroll department perhaps colluding with an outside person that says, I'll pay you, $1,000 more on your paycheck, but you give me $500 for it. Sure. And another one that comes across with salespeople is fake commissions, false sales that lead to commissions. So there used to be that back in the 40s and 50s with insurance policies. People would create fake insurance policies for people who never paid an insurance premium, but the salesperson got the commission bonus for it. And sometimes that leads to when there is compensation for reward. I want 500 commission sales from you. Well, if you're short and you know that you need that commission sale, how much pressure is that person on to fake a few sales in order to reach that commission level? Fraudulent expenses. This is a big one, especially with travel and entertainment and personal purchases that the company pays for. You would not believe that there are places out there in software systems as well as just on the internet where you can print up invoice templates. So you can create an invoice templates. You can create a invoice generator. There's also software programs out there or just the internet that can dummy up receipts. So you have to be sure that these receipts and invoices are coming from legitimate businesses. You could have fake expense reimbursements for travel that wasn't performed or mischaracterized expenses. Padding the miscellaneous expense account with fake expenses and not putting them in the regular expense accounts that would be reviewed. So travel and entertainment is often reviewed by management, but not so much miscellaneous expenses. So you want to be sure that when you're auditing or when you're at management reviewing, that you always pull and look at the detail of the miscellaneous revenue and the miscellaneous expense accounts. Look at overstatements, multiple reimbursements. I've seen where you get a carbon copy of a receipt. You get the receipt in a carbon copy, and they turn both in for reimbursement. And they just say, well, I lost the original, but I have my carbon copy. And for some reason or another, companies will allow that to happen. And again, personal purchases that companies pay for. Look at your credit card statements in detail, scrutinize them. Here are some examples of cash register disbursements. I have seen everything from fake cash registers to fake register disbursements. We had a incident that happened at a company where they were selling merchandise, and they had, all the cash registers were set up, and we were observing the cash registers because there was some allegation that there was inventory going out the door, but there was no sale. Well, we were looking and observing. So we would look at the cash register observations, and we would go back and look at the sales tapes and make sure that there weren't unusual voids or anything on there. And we recognized that there were 13 register stations, but only 12 sets of register tapes. The 13th was run by somebody who was allowing all their friends to come through. They were ringing up fake sales in a fake cash register that wasn't tied to the regular company cash register computer system. So the sales looked legitimate, the observation looked legitimate, everything looked legitimate, except when we looked at the cash register tapes. We were short a tape, and that's where all the fake sales were coming from. Interesting. Or you have a fake sale that no sale takes place. Someone comes up, I look like I'm running the cash register. I'm not running the cash register. I say, thank you very much. I put the goods in the bag, take the little security, clip off the thing, and they go out the door. Another cash register sale disbursement scheme that goes on is sale and void. You have the sale, you take the cash, you don't put it in the cash register, you set it down. You give them the register tape, there you go. Then you pocket the cash and hit the void. Fictitious refunds. A refund was created, but no inventory was returned. That's why you have observers in places like Costco that have a large number of returns to make sure that there is something being returned for the person getting the sales cash back. Over or under charges on sales, and you pocket the money or the inventory. We ring up an oversale. Now, this happens sometimes when we use scanners, because scanners may be manipulated. It may say $12 at the inventory site, but when it rings up, it's $12.99. How closely do you look at your sales register tape and compare it to what you purchased? You would be surprised at how many times the value of the item on the shelf does not match the value of the item on the scanner. It could be errors, poor internal controls again. Maybe there was a sale that went on and they did not correct that in the barcode system before the sales were going through. We found in the early years, and I think it's still going on, in the early years of using self-checkout, people would have a scan code for something cheap, and then they would run it underneath the product. So you had filet mignon at $17 a pound, but you had a dummy barcode from something you purchased before, which was turkey sausage. And you just put that down, and because they're weighted, you put it down, and then you put the filet mignon over it, you scan it, and it scans across the turkey sausage. Again, who is checking to see if dummy scans are being used and undercharging the sales in self-check? Those are a few cash disbursement schemes that we've seen in the past as forensic investigators. It's not going to go away. What becomes, what is new is really just changes of the old ways of doing things. But always look to make sure that you've got copies of documents, that when there are returns, that an item is actually being returned, and that you're checking to make sure you've got all the sales tapes from all your cash registers. And double check that if you've got 50 employees, that you're not paying 52 employees. If you have questions, please reach out to the class questions, send me a message through Halo, or make an appointment through Calendly. Have a great week, and I'll see you in the classroom.